The CPA is the one you adore. Later CPA and Associates.
Hi there, I'm Daniel Later, founder of Later CPA and Associates, and welcome back to our ongoing series, Tax Strategy, right here, right now, where we are talking about great ways to reduce your tax bill and skipping all the jargon. So, today's topic is meals and entertainment. What's deductible and what isn't? Now, I know you've all heard that meals can be deductible, probably 50%, but you're unsure of the rules. Well, that's why we're here today. So if you've ever thought it was business-ish, can I write it off? You are not alone. So today's goal is to help you quickly sort meals versus entertainment, know what's 50%, 100%, or 0% deductible, and tighten up your documentation so you keep the deductions if you've ever asked to prove it. So the big rule where we start. Entertainment is generally non-deductible. Now this includes anything entertainment, amusement, or recreation, even if you've talked business the whole time, like the golf course, entertainment. Business meals can still be deductible at 50% if you or your employees are present and the meal isn't lavish or extravagant. You know what kind of meals are lavish or extravagant. Now, first, we have to decide. Step one, is it meals or entertainment? Now, entertainment is 0% deduction in most cases. This can be things like concert, sporting events, theater, golfing, skiing, any fun outings, anything that you take a client to that's a game or anything else like that entertainment-wise. Zero deduction. Is it meals? This could be lunch or coffee with a referral partner to discuss business, a meal while you're traveling for business, or a meal with a client or consultant when real business is being discussed. The question is, what happens when you have an event that is both meals and entertainment? Well, the entertainment portion, still 0%. The food can be a 50% deduction, but only if the food was either purchased separately or the food cost is broken out right in the bill, so you can see what the food amount is. Then the food can be 50% deductible, while the entertainment still remains 0 deductible. Step two, the 50% meals checklist. We're looking at the most common kinds of meals. Now, for a meal to stay in the business meal bucket, it has to involve you or an employee, and they must be present. It has to have a business purpose. And this must be a real business purpose, not just social time or hanging out. And it must not be lavish or extravagant. So look at the facts and circumstances. Now, expensive doesn't automatically mean not allowed, but it still must be something reasonable. Now, for a therapy practice, a couple good examples that are usually a 50% meals deduction are coffee with your referral source to talk about anything in the referral process, lunch with an attorney or other professional to coordinate sharing a client, or meals during your continuing education travel or a conference travel, or anything like that. And that, when it's a travel meal, it can be solo, just you, or just your employee. That's fine. Now, step three, when can meals be 100% deductible? Now, these are the IRS's exceptions to the general 50% or 0% deduction rules. First off, if the meal or entertainment is a recreational social activity for your employees only. Now, this can be a holiday party, a summer picnic. Obviously, the employees could bring their +1. We're not going to exclude that, but you're not entertaining clients. You're not entertaining potential referrals. Nothing like that. It's for your employees. Another one, any meals that you provide to the general public for advertising or goodwill. Things like distributing food or drinks at some kind of public or maybe a 5K race walk. That's a good example of when meals can be 100% deductible. Any meals that might be treated as compensation or wages for the employee. Now, we're not going to get into the technical bits of that. If you do have a question about that, talk to a professional, but that's another time meals can be 100% deductible. And lastly, and you probably will never see this one in your private practice, any meals that you are actually selling to the public. Think restaurant. Now, a heads up for new things in 2026. Some rules have been changed. Now, the amounts you pay or incur after December 31st, 2025, so that's really starting January 1st, 2026, certain employee provided meals can be non-deductible, 0%. These are things like food or meals that are tied to an employee operating an eating facility. Again, that's probably one you won't see. Or meals that are provided to the convenience of the employer. Again, that's one you may not see. But just as a heads up, the rules have changed a little bit. Now, a couple things that are never deductible on step 4 here. This is our no list. Remember, entertainment events, tickets, events, even if business is discussed, even if business is there, not deductible. Remember, we talked about that exception for employee parties. Taking turns paying. When you have friends or business acquaintances and it's primarily personal or social and people are taking turns paying, that's still a no, not deductible. Meals that are really personal in nature. There's not a clear business purpose. You're hungry, you take yourself out to lunch, you get a burger, you come back. That's what we mean by personal. Spouse and family meals, also not true business unless the facts can support it. If your spouse really is your business partner and you really are talking business and you can provide evidence and proof of that, then you can. But generally think of it as a no. Now there's a couple ways you can track this in your book. The clean way is to create 3 categories for your meals and entertainment expenses. 1, meals at 50%. We talked about those. 2, meals at 100%. We talked about those. Those are mostly exceptions for things like employee holiday parties. And 3, entertainment, which is 0%. Again, we talked about those as events. Even if you have business there, golfing doesn't count. A ball game doesn't count. So a couple simple habits to remember. First, get a picture of your receipt. Add a quick note to it, like lunch with Sarah, team event, game tickets, entertainment, something like that so you remember what it is later. Document this. You cannot justify an expense later on if it's not documented and if it comes up in an audit. So the IRS wants you to be able to prove some things about this. For meals, it's easy. A restaurant receipt is usually enough. Name, date, location, and people who were there can be a good benefit to add on to that receipt. So remember to write the who and why on your receipts too, mostly while it's fresh in your mind, so you keep that documentation. Now, a couple closing thoughts before we log off here. The real strategy isn't about how do I deduct more stuff. It's really about classify correctly, separate food from entertainment when needed, and document fast so you keep the deductions that you are entitled to. Now, a critical thinking question to ponder. What is one recurring expense you currently call meals, but might actually be entertainment or personal once you apply these rules? Think about that one. And while you're thinking, remember, next week, we are going to be talking about retirement plan selection, your SEP, your simple, your solo 401k, etc. So don't forget to like, follow, subscribe, whatever. For future events and tax advice, visit our website, latercpa.com. Have a great weekend, keep helping others to help themselves, and let us help you to do just that. I'll see you next time. Bye.